The economy is crashing and the car market is screaming. I mean, look at this inventory is climbing more and more and more. You get full-size trucks, small SUVs, dualies, commercial vans, as well as large SUVs are filling up these lots. There's millions of dollars of inventory all across this lot. And with prices of this brand new Denali GMC, we have a 24 Yukon XL Denali 4-wheel drive right here, and a sticker price of $118,800 means that not a lot of people can afford to buy these vehicles.
All right, Mark, so check this out. All these cars behind me, I've got more over here, I've got more up there on the hill. So what's been happening in the last few weeks is something that I haven't seen.
And even small subcompact SUVs like this small little Buick, here stickers on this Encore GX Sport is actually going for about $40,000 out the door. You're talking about 45 grand. So I do a search online and I find the inventory. There's actually 2023 model year vehicles. A lot of the electric vehicles aren't selling. The Ford Mustang Mach-E, I'm finding vehicles that have been sitting there for 3 years, and some of the dealers are still charging or asking the original MSRP.
So really what we're seeing happen through the car market is at these auctions, dealers are not wanting to pay up, and the reason being is because they're not selling cars at their dealerships.
I even went perusing a Toyota dealership here this week, and I found that when inquiring about a vehicle, I walked out the door, I actually had 4 separate salespeople approach me while I was in the showroom. When we wrapped up an hour later, I had 2 managers call me as well as the salesperson just to find out if everything was okay. Clearly, desperation is setting in and these dealers are really eager to sell a car, but a lot of people can't afford to buy them right now.
And here's the problem. For the new car dealers to be able to make transactions happen, they have to get their prices down from the manufacturer. And what we've seen from these manufacturers is they're very reluctant to actually lower their MSRPs. You think of Ford.
And the industry shows most manufacturers show inventories grossly up. You're getting millions of dollars of pickup trucks, SUVs, cars, vans, all piling up on a lot of these lots, and they're just not selling fast enough. But a big part of the reason a lot of these vehicles aren't selling is not just the high prices, because a lot of these manufacturers are now cranking up incentives, making it more palatable for buyers to buy. But it's not just that, it's consumer debt is on an increasing level. Have you heard repossessions of all of these vehicles are going up, up, up? And yes, we're up to about 7 or 8% for non-prime or subprime buyers, and as well we're seeing significant amounts of repossessions even for prime buyers and people that could afford it. But unfortunately, because job loss, increased cost of living, and of course taxation increases across the board, means that many people are finding it very difficult to continue making their payments on their very expensive vehicles, and a lot of them are underwater with negative equity, which doesn't help the matter.
But it's really showing that the overall economy, as far as what we're seeing down here in the US, is that people are getting tighter, and the banks are getting tighter too. So dealers are trying to sell these cars to these consumers, and what I'm hearing from a lot of these dealers is they're not able to move metal because the banks are not lending to these consumers. This is a problem that's going to happen. It's going to stretch over a very, very long time, because as inflation stays stubbornly high, car prices stay stubbornly high, consumers are going to be less willing to be able to actually buy these cars. Banks are going to continue to tighten up. Interest rates are not going to lower as quickly as they need to be able to move this metal. And what fixes this car market right now is transactions.
But let's face it, a lot of these car manufacturers have gotten a little overzealous with some of their pricing. Here we have an AT4 Canyon, and let's check a look here. And we have AT4 Crew Cab 4x4, and this one is going for what? $63,000 for this unit? Now I've seen about enough. That's a small subcompact pickup truck, basically a Ford Ranger. It's no wonder people aren't buying. On top of it, we have student debt climbing, rising at an alarming rate. Of course, credit card debt is taking people out, and a lot of people are literally 1 or 2 paychecks away from losing everything like this. Now, we've heard from Ford, we've heard from GM and Chevy, and everybody's bragging, saying sales are up. They're selling all of their trucks. But is that true? Not entirely. A lot of these vehicles they're not telling you are fleet vehicles, and it's the fleet vehicle sales, although they've seen a sudden slight drop here in recently, the mass majority of sales we're seeing in pickup trucks, vans, are primarily because of fleet sales, commercial business. And as well, it's the private sector, it's the personal ownership, it's the non-commercial business that has been suffering. Yes, while GMC, Ford, Chevy have been selling their trucks, even Toyota has been selling some of their vehicles. This is literally only in part due because of the heavy incentives that are being thrown out there. Many experts in the industry, including myself, say that this is totally unsustainable with finance rates and lease rates that are very aggressive, even compared to the bank rates of Canada and the feds. There's no match there, and it's not sustainable for the long term. People know this, and the car business is getting very nervous. And so while we've seen in the month of August, sales have actually dropped in the average transaction price. $44,039 is where the average vehicle transacted. So that sounds positive, right? Considering it's down from months and years. But the fact remains is most of that is due to the heavy incentives that they've been dropping down on people. They're saying $2,500 off, discount this, discount that, and they're doing it for short spurts just to get people in the door. We also can't forget some of the lower cost vehicles that are starting to hit the market. But what continually offsets this is the increased prices of a lot of these full-size trucks, which aren't giving customers any relief anytime soon. I mean, look at Denali's like that. And the Ford F-150s, we're talking about some of their premium models, are just continually rising year over year. We're seeing even the Ford Explorer going up in price, and they promise to see a significant increase for 2025. These manufacturers are not giving up.
Ford has even come out to say that their MSRPs are going to be even higher, and that's just the worst thing for this car market right now. Bad things are happening right now, and they're going to continue to get worse.
And unfortunately, the buyers are struggling in the middle. Did you realize Canada is actually down in terms of the overall average income level? That means Canadians have less buying power today than they ever have. And on top of it, Americans have leveled off as well, and they are also struggling to convert their income to the price of a brand new vehicle. And even more trucks are coming in off the big truck there to fill up more lots. So these dealers are getting heavily incentivized to pitch these vehicles. Major incentives to get rid of these 2025 model years. As the allocations start to roll onto the lots, the 23s and 24s are struggling to sell, and there are some 23s still kicking around. And we know car brands like Toyota, for example, are going partial electrification. Lots of hybrid vehicles like this, and people are finding popular choices in buying new Toyotas. Toyotas are easy to sell, they have the reputation, and the day supply has actually been quite low on these because they've been bringing them in relatively low numbers. But part of the problem with, of course, some of the other manufacturers are they haven't been pacing themselves. And Toyota, while they've been going hybrid, it's a lower cost to create and generate, and they've been doing it for many years. A lot of the other manufacturers now are going pure EV, and in doing so, they're actually having to spend a lot of their research and development to design these electric vehicles and to create these battery packs is going to cost significant money, all at the expense of these brand new internal combustion vehicles like this. And that's why companies like Ford, GM, and Chevy are struggling in selling their vehicles at an affordable price point because they have to fund these new electric vehicles that they're bringing to market. But EV sales have really struggled here recently too. They're not selling unless they're heavily incentivized. And that's the problem. Even Tesla's had to chop their bottom line, all at the detriment of previous buyers. Previous buyers who bought their vehicles a year or 2 years ago now are finding the people that are buying today are getting a much better discount. So it's almost insult to injury to electric vehicle buyers. And while the cost of living crisis is hitting everybody where it hurts, in the pocketbook, less and less people are buying the electric vehicles and going with something smaller, more economical, hence the lower transaction price that we've seen recently. The worst part is used vehicles are going up too. To get yourself a late model used vehicle that's quality with low miles, you're going to pay a serious premium. And customers are now finding a struggle even to do that, because when you buy used, interest rates tend to be a little higher. And so they balance the idea of whether I buy new with lower interest rates or whether I buy slightly used.
Transactions is what we need, because we need new car dealers to sell cars, then to get used cars from us, from their trade-ins. And that way, used cars can go down in price. Prices are going to stay stubbornly high.
So they end up skipping those altogether and go with something older. It's almost unheard of to find a $20,000, $30,000 vehicle with 100,000, 120,000 miles on it, but they're all over. The market is flooded with those types of vehicles, and people are stuck buying an old, worn out, clapped out used vehicle. So people are sort of stuck right now. I use the word stuck because while dealers are trying to incentivize, trying to adjust prices slightly, they're trying to offer up some better interest rates, better lease, flexible lease and finance payment options. The fact remains is people are finally broken. There's less flexibility. People don't have the money anymore, and there's less and less. That smaller pool of people that can actually afford a new or even slightly late model used vehicle is shrinking every single day. The cost of living crisis is finally catching up. with wages that aren't keeping up with inflation and naturally increasing prices of these vehicles, the car market is absolutely going crazy. They're struggling to sell vehicles, and yet the customers, even with these incentives, struggle to even put down the hard-earned dollars to buy a new vehicle. Definitely like to hear your thoughts right there. And as always, definitely see you on the next one. See you real soon. Bye-bye.